all it really required was a very gentle shove from Carl Icahn, right, to send it one way.
That's exactly it. I think it's pretty much put together what everyone has been saying for a long period of time, and it has been the most hated rally in equities in history, I would say. So Carl Icahn's words that basically the fundamentals weren't necessarily adding up to the level of the equity indices that we've been seeing has ultimately put a little bit of a push to the downside. Nonetheless, I do feel that the sentiment is still there. There is still some bullish sentiment, and what could actually put the kibosh in that is the Fed minutes later on this week. Already we've seen a few Fed members come out and say that perhaps we missed our chance to taper back quantitative easing in September, and maybe a token effort, maybe by about 10 billion pullback in December, could be warranted at this stage.
And I've seen European markets open lower as well this morning. But the point that Carl Icahn made, low borrowing costs, the reason for the rally, rather than management efforts to boost results, I mean, that fundamentally is a concern if that is the reason, right?
I think it's always been a concern that a lot of the earnings that we've seen over the last number of quarters have seen higher revenues, mainly due to cost cutting, and you have to wonder how much cost cutting a company can actually take. Ultimately, as you say, interest rates are so very low that investors have to go into riskier assets in order to garner a yield. So that is what has been driving the markets higher for the last few months, and any mention of a tapering back of quantitative easing is often met with a sell-off. So that really pretty much demonstrates exactly what sort of liquidity and what is the real sentiment behind the market, rather than any real fundamentals beneath it.
What do you think the OECD is going to say about the global economy?
I think we'll have a little bit more of an upbeat mode, I think, from the OECD. Again, we have seen better numbers for the likes of the UK. The Eurozone still remains caught in something of a deflationary trap. And of course, the individual countries themselves are still having problems, rising out of the recession, in particular the likes of Greece. But say you might be looking at, say, France or Italy. Those are the two areas that I'll be watching in the Eurozone for the time being. And that, I think, could force their hand to have a little bit more of a downbeat sort of assessment of the Eurozone economy in the coming year.